Thank you for joining us on Business Incorporated at this time. I am Bosun Amafaya here at Channels Television. Coming up in the next 30 minutes, South Africa's Reserve Bank penalizes two banks over weak anti-money laundering measures, and too big to fail as Mozambique Central Bank bails out major lender to save the banking system. Plus, World Bank units at $517 million to Ghana oil and gas project financing. Now let's get on with the rest of the program. It's the final trading day in the week for almost all African markets. Take a look at how some of them are shaping up as we speak. The Nigerian stock market about 0.5% in the green as we speak. We're still holding on to that psychological level, 26,000 the market came back with on Wednesday. Most likely the market ending today in a similar fashion. Yesterday, Thursday, the local market was about 0.57% in the green, about $4 million in total transactions. Across the sub-Saharan Africa, the South African market, the largest on the African continent, still in the red, 0.79%. About an hour ago, the GSE All-Share Index around 15,670. And the Egyptian market closed for Friday about 0.08%, on Thursday, 11,326. And the Kenyan market, that was the Friday closing figures there for the Nairobi Stock Exchange, down 0.52% at 130.95 on the index. That's the all-share index. Look at the Middle Eastern markets, also closed Friday as trading resumes on Saturday. That's tomorrow. Meantime, check out this snapshot of some of Thursday's closing figures across the region. And you're looking at Abu Dhabi by 0.75%, 44.61. The Dubai financial market sitting at 3,548, off track by 0.81%. The Qatar Stock Exchange, deeper in the red, 1.30%, 10,224. In the Saudi market, 7,041. In the green, 0.35%. Formal trading resumes as here tomorrow. And then we'll see how the market's shaping up on Monday. But let's get a bigger picture from around the world, where the market's still on as we speak. The state of the German economy was in the news today, alongside the multi-billion-dollar bailout package of the Italian authorities to save the banking system. Let's bring in Conrad Busen, DW TV channel's correspondent at the Frankfurt Stock Exchange, to talk us through these and other headlines this Friday. Good afternoon, Conrad. Let's start from Putin's Russia, and we'll get in that back on track for you as soon as we get Conrad on the line. But of course, the story out of Russia today says the central bank still making interest rate decision. Meantime, the Italian authorities spending close to $15 billion to prevent a collapse of the Italian banking system. And of course, the economic data out of the German IFO pointing to the 2017 economic growth of Europe's largest economy. The euro has been down this week, for most of this week, and that is good for German exporters. But of course, it's about 7 p.m. already in Tokyo, Japan. Asian Pacific stocks turned positive today as currency swings captured attention, with the Chinese yuan midpoint fixed at its lowest level against the dollar since May 2008. And the Japanese shares slightly up on recent weaknesses of the yen. Look at these numbers. Mainland Chinese shares were higher. The Shanghai Composite finished up 0.2%, and the Shenzhen Composite ended better by 0.949%. The Japanese benchmark, Nikkei 225, closed higher, 0.66%. In Australia, the benchmark ASX 200 finished down 0.1%. In South Korea, the Kospi ends Friday 0.27% in the north, and Hang Seng in Hong Kong was down 0.1% by mid-afternoon. Let's get back to Europe now, Frankfurt Stock Exchange. Conrad Wilson is ready now. My colleague at the Frankfurt Stock Exchange reporting there for Channel Television. Good afternoon, Conrad. It's good to see you this Friday. So let's finish off the week. Let's start from Russia, Putin's Russia, where the latest interest rate decision. What's the outlook on Moscow? From Moscow on Putin's economy as far as the central bank interest rate decision is concerned?
Well, the decision by the Centralny Bank Rossiyskoi Federacji, which is the central bank of the Russian Federation, was that it leaves the key interest rate for the Russian Federation unchanged at 10%. That came as a bit of a surprise to many people on the financial markets, experts for the Russian economy. Many of them had predicted that the Russian central bank would cut interest rates because inflation lately has come down somewhat, and it's now at the lower band of the price target or of the target range of the Federal Bank of Russia. It's at 5.5% inflation, that is. Obviously, the central bank in Russia thinks it's not the right moment to cut interest rates now. It says that inflation reduction continued to be unstable and that a sustainable decline in consumer price inflation was expected for next year, so that it considers an opportunity of cutting interest rates in the first half of next year. The outlook for the Russian economy is uncertain and not very optimistic, given that the sanctions by the countries of the European Union here in Western Europe against Russia were just prolonged. Of course, Russia hopes that this oil production cut that the country struck with the OPEC countries and non-OPEC countries might eventually hold next year, which would mean that the oil price would be sustained and even rise. Russia's economy is still depending very much on oil exports and gas exports and the exports of other commodities. Apart from this, there's a great reluctance of international investors to invest in the country, of course, given the political situation there. But also many Russians are hesitant to invest there. $200 billion are sitting in Russian banks waiting to be invested, but the owners of those billions, well, don't want to invest it in their own country.
Well, let's come back to Europe. I'm not sure, Conrad, if you watched or remember the Italian Job. Well, that's the movie. But this is a different one. This is a different type of the Italian banking job. 15 billion euros to be pumped into the ailing banking sectors. Are investors happy about this move? Not a movie, but it's a move. 15 billion euros.
Oh. It's a horrible movie, really. A horrible
yes, it was.
movie also for many ordinary Italians. The thing is very complicated. Of course, as you said, the Italian state gets ready to, fuel Italian banks with fresh capital, the capital they dearly need because they're sitting on so many bad loans. But the rules of the European Banking Union say that before the state can step in, the shareholders of a bank and the bondholders have to take part in the rescue. This is called the so-called bail-in solution. In the case of, for example, Monte dei Paschi, this old and large Italian bank, many of the bondholders are ordinary Italians who bought those bonds, company bonds of the bank, in order to save for their retirement. Now, if those people have to be bailed in first, this means they will have to swap their bonds to shares which are not worth a lot and which are potentially going to lose value. So it's quite something to expect that soon we're going to see a lot of Italians, angry Italians, protesting in the street.
Very interesting job ahead there for the authorities in Italy. But again, it looks like a very nice and decent day for you folks in Germany. Thanks to the falling euro, that helps the German exporters. Then the Economic Research Institute, IFO, revised its forecast for Germany for GDP expansion next year, citing a slew of positive indicators. Talk us through this data report and what's the outlook, how the market will ride on the crest of this economic outlook from the IFO moving forward?
Well, the positive reaction, you can see it quite behind me. The German DAX, our stock index here, has gained somewhat. It's expected to gain further towards the end of the year. The IFO Institute has raised its 2017 growth forecast from 1.4 to 1.5%. It also expects inflation to increase next year. At the moment, it's at 0.8%, but it's expected to increase to 1.5% next year here in Germany. Of course, as you mentioned, this has to do with the decline of the euro, so the dollar is expected to go stronger, given that everyone expects the Federal Reserve to raise interest rates in the US more next year, probably 3 times. That's what the Fed announced this week. And this is why, we don't have reason to be too happy here in Germany and in the Eurozone in general. The loss and the decline of the euro is mainly due to a strength of the US dollar. It also indicates a continuous overall relative weakness of the economy in the Eurozone. So the German economy might do well, the rest of the Eurozone might do relatively weak next year. We have to wait and see what the outcome next year will be.
Conrad, I think we got to let you go for the weekend. Enjoy your weekend as it is in Frankfurt. Hope to get back to you next week, get back on the marketplace and see how things paces out. Thank you so much. Conrad Wilson, DWTV financial correspondent for Channels Television. Early morning hours on Wall Street. The market was very nice on Wednesday. Today, Friday, the dollar still firming up on major counterparts. But again, the stock futures index points to a flat open. Traders continue to digest the FOMC decision. Meantime, we're expecting the housing starts data today. Those are the index futures about an hour ago. Today, you see the housing starts and building permits report at about 8:30 Eastern. Let's come back home here very quickly. It's the final trading day for the week here in Nigeria. It's been a tough week for the fixed income market, where we see undersubscription at the treasuries and the FGN bond auction market. So what's the market looking like as we count down to the final trading minutes of today, the last trading day of the week? Let's get Alvin Izilian, chief dealer at FSDH Merchant Bank, to chat to us on this. Good afternoon, Alvin. Okay, Alvin, if I'm sure you're on the phone. What's the sentiment like in today, the final trading day? We're getting the final few minutes before the market closes.
Okay, the trading today has been relatively quiet compared to what we had yesterday, when we had just a day after we had the auction. Market had adjusted to the high yields we saw from the auction on Wednesday. But because the yields closed higher, we saw some interest coming back into the market. And for this bond market, we've seen like about 20% drop in yields for most of the high-end securities. But for the Treasury bills market, it's attraction has been on the shorter end of the curve, the December to March bills. On the long end, because of saturation on that end, CBN has been selling OMO bills on a regular basis. We've not seen a lot of activity there.
Give us a few seconds. How do you preview next week trading week down to Christmas?
Well, the way it is now, market seems to be relatively liquid. We still think on the short end of the curve we'll see some level of activity. Definitely, the central bank will continue with its monetary tightening policy of issuing OMO bills on a regular basis just to regulate market liquidity. But as for the long end of the curve, for the bond fixed income market, we don't see much happening.
Okay. Thank you very much. Have a great weekend. Alvin Izilian from FSDH Merchant Bank. Finishing this round from South Africa, where the Reserve Bank has imposed fines on the local branch of France Société Générale and Barclays Africa's retail banking unit, ABSA, over the weaknesses in their measures to combat money laundering and terrorism financing, although no crime funding or money laundering activities has so far been noticed. The two banks have been penalized a total of 12 million South African rand. We'll be back after the break. Stick around.